Good morning and welcome to the fourth session of the Risk Australia virtual series. And thank you on behalf of the conference organisers for attending the event. My name is Vasyl Nair and I'm the Deputy CEO of the Mine Superannuation Fund and its former Chief Risk Officer. And today I have the responsibility of facilitating a Chief Risk Officer conversation on emerging risks in 2020 and beyond. And I can say with a fair degree of authority that we'll be glad when this year is over. I'd like to introduce our illustrious panel in the first instance. Sitting to my right in the top of the screen, we have Antoine Delterme, who is currently the Chief Risk Officer of UBS Australia and New Zealand, was appointed in 2019. Prior to UBS, Antoine's held numerous senior risk management roles across the APAC region, specialising in equity derivatives trading. So thank you, Antoine. To below Antoine, we've got David, who's a corporate governance, risk management, compliance and legal professional. Very long, extensive list of things that he's done. He's currently the General Counsel and co-founder of Xinja Bank and the former Chief Risk Officer, which my understanding was the second neobank to be granted a full banking licence by APRA in 2019, which is a significant achievement. Welcome, David. Our next panellist to David's right is Tony Woods. He's currently the Chief Risk Officer of MaxCap, or the MaxCap Group, one of Australia's fastest growing real estate debt and investment groups. And in this role, he leads your legal, risk, compliance, technical and reporting functions. And prior to that, Tony spent extensive time in Australian retail banking with periods in ANZ and NAB. So welcome, Tony. And then above Tony, we have Donovan, one of my former colleagues. So it's good to see you, Donovan. Donovan is the Chief Risk Officer for Insurance at Westpac, and he leads the risk and compliance teams for all their insurance entities, including life, general, and LMI. He's also responsible for seeing all the risks faced by these entities, both financial and non-financial, a very complicated role. So welcome, Donovan. And thank you for taking the time to grace us with your views on Australian risk management. Before we start, I would like to make the point that in our preparation, the panellists and I have done our best to curate a session which is transparent, current and very relevant, but I'm sure you can appreciate, as probably a large number of risk management professionals in this particular conference, and all matters of risk management, the views expressed today by the panellists and myself are their own to a certain extent and don't necessarily reflect those of the organisation. We have made we're going to try to be as transparent as possible and not let panellists off the hook, but they'll indicate where their views deviate from their organisation. So, and we appreciate that. All right, so let's get into it. My first question is actually for Antoine, particularly in relation to the prudential regulator and regulators more broadly. And Antoine, how are you managing the increased resourcing and sophistication of our regulators in the Australian and obviously New Zealand context? And are you doing anything differently to manage those increasing expectations?
Thanks, Vasyl. I think it's a very, very relevant and a good question to start this discussion. I agree with your assessment. I think the Australian regulator are well resourced, they're sophisticated and globally connected. And so are we coping with that expectation, and what can we do about it? In my view, the biggest things that we need to focus on is technology. We need to adjust our technology to be able to meet those needs. To give you an example, at UBS globally, on a yearly basis, we do spend over $2 billion in IT development, and half of it is over $1 billion is for regulatory purposes. And it's not slowing down. It's been the case for the last 2 years. And so what can we achieve? For example, we move most our data, including risk data, into the cloud. So that makes us more agile. We're only scraping the surface at the moment of the adaptability and the reactivity of how we can handle data, how we can analyze it. Another stream is AI technology. We reduce drastically some of the complexity of some of the checks that we do on, for example, speed up various credit checks and facilitate data quality issue. So at the end of the day, what we want to achieve is our risk people, especially the one that we do have in Australia, they would spend more time analyzing data, challenging data with the first line, rather than processing it. And we all know that without that push for technology, the processing of data is resourcing intensive or technological intensive. And at the conclusion that ability and nimbleness in the way we can handle data and queries will help us meet the regulatory reporting deadlines and giving the regulator comfort in our control and processes.
Antoine, are you starting to see the benefits of that increased investment in that particular area?
Yeah, practically we do. In the way when we receive short deadline queries from regulator, we're able to get a presentation in well-packaged data much faster than we were 3 or 4 years ago. I think we really, this year, I really feel, and I think COVID might have helped to push that, but I really see the delivery coming along. And I do think we're only scraping the surface, especially from the cloud processing.
Interesting. Donovan, obviously you work for Westpac, who've had significant regulatory focus in the recent period. How have you seen the increase in sophistication of the regulator, obviously, in the last 2 years? And has Westpac changed their approach, other than hiring every risk management professional in the market? Has Westpac actually changed their approach to managing the regulator, increasing resources? What are some of the strategies that they've deployed or that you've deployed in your own team?
Thanks, Vaz. Yeah, look, I think I'd echo a lot of Antoine's thoughts around the need to make sure that we've got the right data capabilities. There's no doubt that as the regulators continue to do that, if you're not matching that sort of pace, you're certainly going to find yourself falling behind. Looking at the insurance from an insurance lens, the other thing that's increased a lot is transparency of that data by the regulators. So things like producing sort of leaderboards and statistics on how various individuals, companies are faring from a claims lens, those sort of things. And I think that trend is certainly one that's going to continue. So I think the resource and sophistication is one thing. The other thing is what the regulators are doing with that data. Those put a high emphasis on the need to get your own data right. What I'd probably add to Antoine's is processes, because the data is great, but you also need to ensure that you've got the right processes around that, not just for the larger scale processing and analysis of data, but the individual processes around managing breaches, certainly around managing your processes to prevent those breaches. With ASIC's increased breach regime coming in, it's one of the areas where we're putting a lot of focus to make sure that goes right.
Yeah, I think in my own experience as well, both in large and smaller entities, I find the standard has changed. Historically, it was show me that you're actually doing this correctly, whereas now I find that the regulatory intervention, so show me that you're not getting this wrong, which is definitely different from my perspective. We might move on from this in relation to the next question, and I'll start with Tony. Tony, are there any areas in your risk management framework of low maturity that have been exacerbated as a result of the global pandemic? And
thanks.
If you're able to share at a high level, what were they?
Sure, thanks, Vaz, and good morning, everyone. Who'd have thought we'd be sitting here in 2020 doing an electronic conference? Isn't it totally unusual and a different outlook? I must admit, I read something a couple of weeks ago, and the folks were saying if you'd have actually outlined in 2018 what you'd be doing in 2020, every one of us would have been wrong, absolutely wrong. And so then you try and extrapolate that and say, well, how good was my risk management framework? And in fact, what were the low and high priority aspects of what was going on? Because when you look at it, we're a small, very quickly growing group of companies. We've opened a number of new offices. We've got a major growth agenda with institutional funds across the country. And so we're constantly evolving what we do as against perhaps some of the other panelists who have a more historical benchmark and base to work from. But luckily, we were very, very conscious about what we wanted in the framework and looking at it. And we were trying to do those fundamentals. And look, when you've been around as long as I have, which, as you said, was 25 years plus with ANZ and nearly a decade with NAB, it doesn't only make you old, it actually says you've been through these processes once or twice. And so we were at that stage. But we had the BCP, we had it ready. We were considering aspects at our risk committee and our audit committee sort of as the overview piece, but, suddenly the C's changed. And, even if you stick to those basic fundamentals of the 5 C's or 4 C's, depending where you come from, suddenly one of the C's was crisis. And you actually said, well, what the hell? So I guess one point we'd share was, our BCP was very clear about what happens if we had a downtime for an office. Our mothership is Melbourne, the parent of the company is Melbourne, and we have other offices across Australia and New Zealand. So it was like, well, what if somebody goes offline? Even if the mothership was offline for a defined period, we imagined we could send people to another state and operate. We could work from different things. We had a longer term vision that maybe we could operate some people, and we were very supportive of flexible working and having folks working from home, but it was probably more in processes against the reality that I think in most companies where you supported working from home, it wasn't seen as a permanent nature for some months or any of those things. It tended to be more something you did when you needed to work on a project, or in fact you needed to be home for some appointments or something of that nature. As against me talking to the folks today from a converted bedroom, which has been my office for the last 5 months. It's a very different world. So we were looking at in our framework, well, okay, what would be our step back? It comes back to Antoine's piece about technology. Could we shift and operate out of another office? As against, suddenly it became, how do you operate a functional business with settlements, with legal requirements, with documentation requirements, with external counterparties? We wanted to do settlements. We wanted to write new loans, and we have. And in fact, last quarter was our biggest to date for the history of the company. It's 14 years old. We expect this quarter to be bigger still. So we haven't even had an opportunity to sit on our hands through the crisis. We're actually trying to make some value out of this crisis and reposition ourselves as to how it goes. So I would share that point, that we thought the one office was something that was a thing. Suddenly, overnight, we had to shut all our offices. We've had to operate our total business from home. And, I'd give great credit to our CRO. He had that situation in place. He was really strong in having the ability to do it. And literally we shut the office, and overnight everybody's gone external and continues to be, because being Melbourne based, delightfully our world's just gone from 5 kilometres to 25 kilometres. But as I was sharing with the panellists before we came on and share with the folks on this conference, who would have thought our world would be 5 kilometres? Who would have planned a risk framework that says I can't go out of 5 kilometres, I can't sign a document? How do I get documents signed? How do I work with lawyers? Well, how do we get bank guarantees delivered into who, and how would you store them? So we've had to go through bridges of documentation safety and all sorts of aspects that, would have been extreme. And in fairness, I think most people on this call who have any risk background would have had that journey, which is stuff happens at a point in time. And the longer you get from that point in time, the more people believe it'll never be repeated. And I'd suggest that COVID-19 in a year or so was something that happened a year ago. And then it'll be 2 years and 3 years, and people will start and take the edge off that severity of risk mitigation and that. So I think the test to us as a risk group is keeping currency with the passing of time. And that's that piece that comes through the modelling. Your framework, you prepare, you respond, you mitigate, and you go on. And that's been our journey. And we've been lucky being small, because we could respond and get reset very quickly, which I'm sure some of the David would agree with me, because I'm sure he's from that space with coming in as Xinja. But for Donovan and Antoine, it's a very different picture of you have big ships to turn. We've luckily had a small one that we could steer through the choppy waters.
How have you, and look, I must apologise to the audience because we are having some visual issues right now. I appreciate we are a boring bunch of chief risk officers who are frozen on screen for you right now, so we can still see what's going on. And I'm hearing the virtual laughs as well. And it looks like you are back with us, so apologies for that. We're back online. Tony, just before, I'm very interested in David's views on this, but how are you balancing your mind share? Because obviously being Melbourne-based, You're a growing company whose risk management framework has to mature very, very quickly, considering the space that you're in. And you also have to utilize and uplift very, very quickly what I describe as probably the outer or less mature parts of your risk management framework. So how are you dealing with that personally? What are some of the strategies you're implementing? And, when is your first beer going to be post-lockdown is the most important question, I think.
Well, I won't talk about the ones during lockdown. Our position is it'll be a continuum, and I think that's the reality of what is. I don't think it will discontinue. What we've done during the lockdown period is luckily over time and over the many years I've been involved, I've got a great external network of folks across the banks and including through the regulators. I've been able to reach out and talk to folks, and we're not reinventing the wheel here. The wheel's still round. We can kid ourselves about what we're creating, but the wheel's still round and the risks are being managed similarly by lots of folks. So we've been stretching out with that. We've worked long hours. I've got construction risk heads and people like that who are working 16, 18-hour days because one of the things that has stayed open has been a lot of the construction. So we have monthly drawings on multiple sites where we're doing those things. So it's not just about battening down and waiting for the wind to pass. It was actually how do we functionally operate? We've settled a number of major constructions in residential property and commercial property and all of those things. The question you had was, well, will they settle well? What's your fallback on those sorts of scenarios with disruption in the market from all sides? So we've constantly been reaching out. We meet on a regular basis. If you could see my desk where I'm sitting now, there's 2 laptops. There's two iPads sitting there and a large screen behind that and multiple sets of ear sets, which, like most risk people, the day is long and sometimes unforgiving. It's not about saving the organisation. See, I don't think that risk management is separate to good management. And I think if you accept the fundamental, if you're going to run a business well, you have good risk management. You have the right risk culture. You have people who are compliant because that's the right way to do things. And so if you accept those as basic fundamentals, we're just saying to all of our people, do the right thing the right way. And they've been working towards that. And our job really is just to make sure that they don't get distracted. So it's been a constant thing. And absolutely, Vasyl, I'll be celebrating. For those that know me well, it's more likely to be riding a bike down Beach Road than beer. But, I'm looking forward to getting out in the sun.
Thanks, Tony. David, we've not heard from you yet, but I'd be interested to obviously understand your thoughts around the current line of inquiry around the areas of your risk management framework that were exacerbated, but also your experience with the regulator, because you had a very acute one, obviously, over the last 18 months, particularly through applying for and being granted your ADR license.
Yeah, for sure. And thank you to the panelists and everyone joining us. So look, by way of quick introduction, which will quite nicely answer your questions. So Xinja Bank was founded 3 years ago by a passionate group of people that were very customer-centric, wanting to bring best-of-breed technology from around the world to the Australian retail consumers. So we were basically always building our bank for this particular scenario of total disruption of the normal practice of how banking occurs. So everything we have is cloud-based, is software as a service. So we were very quickly able to spring into, call it almost a prolonged sense of BCP. We've always had our staff quite happily working from home on a regular basis. All of our systems are secure and accessible throughout the world. We were actually able to respond very quickly. I think from a regulator perspective, look, we are very fortunate that we operate in a highly regulated market, and I think that everyone on this call and those that are sort of viewing will start to sort of really appreciate that the Australian context has been set up well by very strong and stringent regulators and the associated laws behind that. And that's actually going to put us in a really good step globally when we come to recovery, which is kind of where we're at now. So, I mean, it's 2020, wow, what a year. But I think everyone now has to get in a mindset of, so what does that mean from a customer journey? What does that mean from our cyber security and everything else. So I was recently doing a bit of banking in a good old-fashioned branch for my grandmother a few weeks back, and it was actually quite a confronting experience to be in a physical branch with probably 15 or 20 other people. Hopefully they're all COVID safe and they've all been sort of following the great government guidelines. But for me, that was one of those catalysing moments. We kind of built Xinja Bank so you can do all of your traditional banking functions on a smartphone. Now, because of the nature of actually it being quite confronting going into a physical branch, I sort of said to myself, yeah, wow, I think the age of technology and really embracing that was certainly upon us before, but now with things like COVID and almost the normalisation of that use of technologies by customers, I think welcome to embracing technology for all it has, everything from social media to BCP scenarios that can potentially go for a 12-month period as opposed to the traditional 1 month. So yeah, look, we're embracing the new norm and encourage others to jump on the bandwagon, because I think customers will expect that going forward.
Probably just out of interest, have you seen your business experience an uplift in patronage or alternatively like deeper share of wallet since the commencement of the pandemic?
Yeah, so look, I mean, we're 3 years into operations now. The last couple of months have been incredibly busy from a customer acquisition perspective. Customers are coming to us in their droves, and we are doing our absolute damnedest to give them an amazing customer experience. It's all digital. It's all via a smartphone. And I think that will slowly but surely become the accepted practice in banking. I don't really think anyone really enjoys going to a physical bank branch to deposit money or to take it out, whatever you're doing. So I think banking and risk almost has to kind of fit into your life now. And I think customers will be very attuned to those that don't adapt and don't embrace all means of technology and what that has to offer.
Thanks, David. So similar to Antoine's earlier point, I would suspect the additional investment, you're starting to see the benefits of that from both a risk and a business perspective for Xinja particularly.
Yeah, absolutely. So, I mean, Xinja Bank was founded a bit over 3 years ago now, which, wow, it seems like a roller coaster of fun and emotions. We obviously, it's quite expensive to set up a bank. You've obviously got to go through the regulatory approval side. You've also got to get your technology solution architecture embedded and up and running. So we're now starting to see almost the returns on that investment from both the technology, but also from a risk perspective as well. I mean, we're very proactive on our risk management. We actually see it as a form of competitive advantage as opposed to just proactive and almost tick boxing. It's a case of, so where are the opportunities in the market? What are customers wanting and expecting? And then how can we deliver on that and to use the world that we're in now for our advantage and for our customers' advantage as well.
So thanks, David. So 2 points. Donovan, I will give you the right to reply later as a senior leader in one of the organisations with the largest points of presence for banking in the country. Just more of a kind of a technical strategic point. Antoine, just for contrast from Tony and David's response, obviously you have a significantly probably larger remit in the context of your role. How have and I know you answered this to a certain extent with the first question, but how has your risk management framework or UBS's global risk management framework been tested recently as a result of the pandemic?
Yeah, thanks, Vasyl. And it's interesting. I feel like everything that Tony and David were describing, it was very similar. There was, regardless of the size of the ship, there was a sense of togetherness. We in something that is so unique, one in a multiple lifetime event, that everybody worked hard to make this work. And I think it's across the whole banking industry globally. The operational resilience has been amazing. And you can see through the result of most of the institutional and banking industry has staggering results. 2020 is going to be a good year for most banks. And I think from a real pure risk management, one of the focus out of it is definitely cyber and fraud. We can really see an increase of the threat, the sophistication. UBS as an organization have more fraud attempts this year than ever over the last, since a year to date compared to a yearly event. But locally, one of the things that, if I want to add maybe a different angle to what's happening, where I think we need to focus, and the regulator will expect that, it's around how we maintain a strong risk culture in this medium and long-term half working from home environment. We need a strong tone from the top. We need the global manager to be example. But how do you teach that to a junior member that just joined in 2020 in your organization? He only see a few Skype meetings. So how does he know the strong culture that you've got in your organization compared to another one? And I think we need to trickle down the responsibility of the risk culture to middle management and team leader. Those people are the culture carriers through Skype or through Teams more than the global leader that had a big town hall before. And I think we need to be able to give them the tools to demonstrate that risk culture, to carry that risk culture, and give them the responsibility to feed it back. And from a risk management perspective, I know that the regulators expect from us to be able to say our risk culture is good and why. And I think those people are the focus more than before through the pandemic and the work from home environment.
So that's a really good point, because and apologies to panelists, we are, as per usual, running over time because we don't want to eat into the David Nichols hour who's in the next session. Yeah, that's right. But from a culture perspective, Donovan, and this is particularly of interest to me, is it actually reasonable or feasible in the current environment to continue to manage all of the risks in the way that you used to, kind of pre-pandemic, obviously? And I'll take a personal view on this particular one, because obviously the response is, well, our risk appetite is zero, or kind of low or zero for most things. But and how does that intersect with culture, considering your workforce is now significantly more remote? You're onboarding people remotely. You don't have that touch time, when we all know that the hallmark of a really good risk team is actually being physically embedded within their lines of business or their business partners.
It's a really good question, Vaz. And look, I think just sort of touching a little bit on, as you say, for contrast for some of the other panelists, how we sort of fared as a group through COVID. When you look at the scale and the size, you'd say there's no way that you can move an organization like that so quickly. And yet, like many others, we did. And I know that a lot of players across the industry are looking at that and going, should we be doing that all the time? Why didn't we do this regularly? And I think that the short and quick answer is probably no, we shouldn't. You should be redoing a COVID style each time. But I think there are some real lessons there to go, what was it that made it work so well? How did we get such scale from a technology side, from a people side, from a culture side? How did we get that working so well? And how do we take the essence of that and bake that into future change initiatives and whatever BAU is? So I think that's a really important part. In terms of managing the risk, I think for me personally, one of the most important constructs of risk is being clear on your risk appetite. It's easy, especially in times of crises, to start thinking about how do you take this risk away? How do you sort of absolutely minimize this risk? It's more important than ever to say, what risks are we consciously taking on? Maybe a little bit more than what we did before, but not too much. So I think a crisp understanding and having a framework and a thinking process of how you bottom that out and get comfortable with those risks, one of the key enabling factors. So looking at risks, through COVID, post-COVID, I think that's one of the keys to success. And I think, as is always the case with risk, it's not just what makes me uncomfortable from a risk lens. It's the cost and the benefit, not just the risk reward, but the cost and the benefit. The age-old sort of textbook risk piece, which is, you wouldn't pay $2 to avoid a gamble of $1. So sometimes when you really get into the problem and you're really immersed into something and it looks so urgent and so big and you need to solve it, you need to make sure you're taking that step back and taking that strategic view and going, are we going about this the right way? And I think culture is a huge part of that. So Antoine sort of highlighted some of the aspects of culture. We certainly through COVID, we did 1 or 2 deep dives to say, how is the culture evolving? Because certainly whatever risk culture you had before, it was different in COVID. So we did a piece of work to go, all right, so if you had quite a poor risk culture, what outcomes might you see? If you had a really strong risk culture, what outcomes might you see? And we did a bit of testing through COVID to kind of say, are we seeing any indicators of poor culture? Are we seeing indicators of positive culture? Is there anything more we need to do in this space? And I think it was quite pleased to kind of say that overall, and I think it's a testament to the investment we've done in the space up till this point. It's when your culture comes to the fore, and I think we saw that happen. So things like we didn't need to put temporary governance in place. We relied on the governance we had. So one of the things you could say is, well, people are in doomsday mode and saying, you know what, whatever the governance, whatever the stuff was, that's all gone now. It's crisis mode and anything goes. Certainly wasn't the case. People stuck to what the governance needed to be, rational decisions, making them quickly, but not too quickly. I think these are all some of the things that I think we're still working through, probably as an industry and as a society, to say, how do we take the best of what we did and put that into our arsenal going forward?
Excellent. Thanks, Donovan, and for the really comprehensive response. Look, just as an adjunct to that particular question, because it does come down to resourcing, and obviously, again, talking about Westpac and their general hiring spree over the last 18 months, I mean, you start to see the benefits of that, the increase in resources. Probably a question for Tony, and then I'd be interested in David's view. A lot of large financial service institutions have increased the size of their risk teams. That is just kind of a fact. Are you starting to see, Tony, in your previous roles and your current roles, and this is, I'll throw it at the whole panel, diseconomies of scale in terms of can you actually solve culture and technical risk and framework and process-related issues with bodies? That's the first question. And the second part of the question is, concurrently, are you then seeing a dearth of talent in the risk management market in Australia?
Yeah, well, thanks, Vaz. And I think sometimes you solve some of those misbehaviours with dead bodies, but that's probably not something that we could put out there as an appropriate way of reinforcing culture in the environment. I think the reality of the world is, and for the perspective and taking on from Donovan's point of view, see, I'm not sure that tomorrow will look like yesterday. I don't actually believe that we're going to go back to what we were. So I think there's 2 parts to that question. One is, what will tomorrow look like? I think we're going to see people and the younger generations want to work off-site part of the time. So our new continuum will be a combination of today and tomorrow as against going back to 100% in the office, and that, which I think then feeds into what sort of people do you need and what are their core skills to be resilient in standalone environments and to keeping culture and embedding that. Then you're going to have to find different methods of doing that and keeping it fresh. As Antoine was saying, how do you keep people on game with these things when you're only seeing them once or twice a week on a Zoom call or a Teams call, and what are their hot spots? And, when you see that blank look at the screen, they're reading something instead of listening to you. There's a certain element of a real world thing. So, yeah, I'm lucky. My team are handpicked specialists, and I had the luxury of doing that and building it out as we grew. Honestly, I've got them chained to whatever room they're in their houses so I don't lose them. I know they've been subject to regular offers and better offers than they have. So I think some of what's come back to is, do they want to work for us? Do they share our vision for the company? Do they share the values that are there and want to be there? Because honestly, I think if I compete with them with money, you can't win. It's not something, we all like to be paid more, but then the day after it's another event if you're unhappy. It's a thing. So if they came to me and said, I'm quitting because somebody's made me a significantly better offer, I'd say, well, go with my good wishes and let's stay in touch. But we haven't lost anyone from the risk function, full stop, through this functionality. We have actually added, and we've added technical depth, and we've added a new compliance officer who we chose particularly his skill set was heavily audit orientated. So he came from one of the major accounting firms and had that naturally inquisitive mind, really smart young guy, and more focus on that. And we actually had to onboard him electronically during COVID. So we've had to get him started and doing his testing in that. And he's a very different individual than probably the last person we had and who we'd have thought of outside of that. So that's changed our thinking. And have we changed the talent piece? Yeah, look, I'm sure everyone on this call gets phone calls. And I take that from the people who are listening to the conference. There's cycles, and risk is an in-demand part of the cycle at the moment. And if it's not, well, then you'd argue the business doesn't have a good risk culture and a good framework, and you'd query whether that drive is coming from the top, because you may have people, but you can always get better people. You can always reinforce that and bring yourself to prepare for the future. And I think, you can't create 20 years of experience overnight. You can't create the environment for people to do it. You actually need to teach them and work through it with them, with the frameworks and with everything else to ensure you get a successful outcome. And that's whether it's a David business, the new emerging business, or it's the established European businesses. The challenge for all of us is to have people, integrate them with capability and make them want to stay. And at the moment, there's just not that many people there, and there's certainly not many people who have experienced downturns, because the gap between major downturns, particularly in the Australian economy, and that is quite large. So a lot of people have just stepped outside of it.
Thanks, Tony. David, just quickly your views on that particular question around diseconomies of scale from increasing resources, and what's your view on the level of talent that's left in the market for risk management professionals?
Yeah, for sure. So look, as someone that sort of started a company with 5 or 6 others, then we've rapidly grown. Now we're 90 people. We've got a risk team that's probably 10% of our business. We've always strongly encouraged the T mindset, where basically you're an expert in a number of areas and then almost a generalist in multiple. So things like COVID have encouraged us to have that mindset that everyone's got their core areas of expertise and what they sort of know and what they've done before. But welcome to a brave new world where you must be able to embrace being agile, being fluid and dynamic, solving problems on your feet. Look, the risk and compliance market is quite simply red hot, and if there is anyone that's watching me now and interested in the Nair Bank, please hit me up on LinkedIn.
Is this a presidential debate? I can't mute you, David. So
breaking up there. Yeah.
But no, in all seriousness, look, I think there's a need for risk and compliance talent to evolve their mindset. So it's not just the tick box approach. They've got to be able to actually think strategically, look at the business and sort of say, okay, what products are we rolling out this quarter, and how does that impact the customers? But yeah, it's an evolving world, and I think we as professionals must embrace that change and face into it. It's the only way.
Thanks, David. Look, I apologise to the audience, because our facilitator will have a conniption if we don't end exactly on 12 o'clock. So we'll do our best to wrap this up, because I think it's been a very instructive and highly insightful conversation. I do have probably one last question, probably for Antoine and Donovan particularly. Internally, based on the global pandemic, and obviously you do quantitative risk assessments and your quarterly profile reviews and things like that, your personal view only, what do you think is the next 1 in 10,000 event that will probably strike us in 2021? Donovan.
Thanks, Baz. The crystal ball question, absolutely my favourite. Yeah, look, it is a great question, and it's a topical one for me. Looking back at some work that I previously did as part of the Macroprudential Policy and Surveillance Committee, some work I did in Vasyl, where we'd track these things regularly. So things like solar flares, biological warfare, cyber attacks, pandemics. So look, I'd make a comment, and then I'd suggest something that I think could be the next big one. The comment I'd say is, with events like this, it's easy to focus on what is the next big bang thing. I think what's equally as dangerous, if not more so, are the slow burners, the boiling frog syndrome. And I think we've been there with topics like climate risk, for some time. So I think while certainly these big bang ones capture our attention, we need to make sure we're turning attention to the slow burners as well. What's the next slow burner? Personally, as I say, there's a number of hot topics for the next big thing. I think it might well be a large-scale cyber, whether it's sort of cross country or otherwise, but a large-scale global cyber attack. That's where I'll put my money.
Excellent. We'll hold you to that. Thank God we're not live or being recorded. Antoine, I'll give you the last word. What's your view? What's the next 1 in 10,000 event?
I think the next big slow burner for me is any outcome we see on the current polarization of the society. There's an increase of trade tension. The rich are getting richer. The poor are getting poorer. This various nationalism. And what's the outcome for Australia? It's more of a northern hemisphere, but situation right now, but he will have an outcome in Australia. And I think if the regulatory expectation become more silos, very specific and separate from each country, global organizations are going to struggle.
Excellent. Look, I think we're out of time, so I'd like to say thank you. Tony, thank you very much. Donovan, David, Antoine as well. And thank you to the organisers too and the audience. I think it's been a fantastic panel. Hopefully you stick around for David's session, which I think is the last of today and also tomorrow for the Risk Australia virtual conference. And we look forward to speaking to you soon. Thank you very much.
Thank you.
Thank you.
See you.